Alright, hello and welcome to Camel Finance. I'm your boy Camel, and today I'm mostly going to cover the charts because I didn't get around to doing a weekend deep dive video. So I'm going to go over mostly the charts today. I got a couple of things about Bitcoin I wanted to point out. Some comedy pertaining to the Japanese bond market, so I'm going to show you that. And then I'm going to send you on your way, hopefully, to go and watch this video at the end. I want to refer you to another channel to go and watch this video, which I think is really important. So let's get straight into it. I saw this from Peter Brand. Peter Brand has been a trader since 1975, is a technical chartist like I am, and very, very good at what he does. Anyway, he says three things he believes about Bitcoin. It says the inevitable okay of a Bitcoin ETF in the US will be a non-event. The Bitcoin halving will also be a non-event. And Bitcoin's correlation to other markets is likely a non-starter argument. Bitcoin will be top of the food chain, and that's the only thing that matters. So working back through these, Bitcoin's correlation to other markets is a non-starter. I genuinely believe this. I've said this multiple times. Whilst it often has traded like a tech stock, there has also been times where it has traded more like gold than anything else. But ultimately, you've got to think about it like this. Bitcoin is likely going to end up as a completely uncorrelated asset. And the reason being, it is completely unique in its design and in its architecture. This is a peer-to-peer distributed network. There is a finite, non-inflatable supply. So long as adoption continues, so long as the network continues to grow, Bitcoin will continue to become more and more valuable over time. And therefore, I do believe that over time, we are going to see Bitcoin become the top of the food chain, just like Peter Brand has said here, and lose its correlation to things like tech stocks. Then we have this Bitcoin halving will be a non-event. I've kind of been talking about this for a long time, haven't I? I've been suggesting that we may well see an early top this year and then spend the rest of the 4-year cycle in a 3-year bear market decline. I've been saying that this recently has been very, very tested. We're still in this testing phase. We don't really know if that theory is going to be right or wrong, and we won't for around another month. But eventually we're going to make it to that time frame that I keep talking about, where we'll be able to say with confidence whether or not there's any merit to this idea of mine. But it is interesting that Peter Brand says that the halving is likely going to be a non-event because markets discount well in advance. And this is true. When something is known, for example, the Bitcoin halving, everyone knows a halving is coming, right? So it should already be priced in. Why would people just sit around and do nothing and wait for a halving and then try to trade the event? That's not really how markets work. Markets are always forward-looking. They always price and discount things in advance. And this is just one of the reasons that I have been speculating we're likely going to see some kind of blow-off top event that leads to everyone holding the bag as they assume that the halving will not be a non-event. So it's going to be interesting to see what happens there. And then going back to point one, the inevitable okay of a Bitcoin will likely be a non-event. This one at first, I was like, really? Does that make any sense? But somebody has already asked the question, Colin here, he said, why do you think the Bitcoin ETF will be a non-event? And Peter comes back and says, so you don't believe that some really smart and deep-pocketed operators have already gotten in ahead of this? He says, over 48 years of speculation, the thing he's learned over and over again is that markets discount events before the events are even events. This would likely be a buy the rumor, sell the fact type of event. And again, this feeds into what I've been saying, doesn't it? It makes sense, at least in my mind. At least in my mind, it makes sense, and apparently in Peter's too, that the big players will have gotten in at the lows. They would have already accumulated a massive stack of Bitcoin. Then they will likely blow this thing off to new all-time highs, launch the Bitcoin ETF, which, by the way, is due to be launched just days either side. I can't remember if it's before or after the halving. I'm pretty sure it's before, but it's very, very close to the halving date. We're going to see the Bitcoin ETF launched, assuming, of course, it is indeed approved. And therefore, it makes sense that these big boys that already got in at the bottom will be using their ETF as a distribution method. As people buy the Bitcoin ETF, of course, they need to have exposure to Bitcoin. And these big boys, I think, could easily just accumulate at the lows and then sell those Bitcoin at the top to the people that are buying the ETF, and it could work as a distribution tool rather than an onboarding tool. Again, all of this is to be determined, but it's interesting to see a veteran such as Peter, like I said, who's been in this markets for over 48 years, starting to point at these things and say this is what makes the most sense to him. It also makes the most sense to me, as I've said over and over again, and it's going to be a very interesting few years, that is for sure. Fitting in with this theme that the halving event is likely going to be a tool that is used to force people to hold the bag, people that don't really understand how markets work. Again, this is a speculation at this point, but Nev here has pointed this out. Look, he said, look, throw this scenario out, okay? Throw this scenario out. What's he talking about? Well, CNBC are now on live TV reporting the upcoming halving,
The top 100 digital assets are up 48% this year, compared to 17% for stocks and 9% for gold. Meanwhile, Bitcoin is outperforming the NASDAQ 100, as are crypto-pegged stocks like Coinbase, Galaxy Digital, and MicroStrategy. But Bitcoin can't seem to break out from the $30,000 price level. One reason being there isn't much investor interest. We're seeing some support from institutions, but there's no real catalyst to drive the price either higher or lower. Things that would normally affect Bitcoin, such as the Fed raising rates, are barely moving the needle. What the market appears to need is a return of confidence from retail and institutional investors. That could potentially happen if an ETF that directly tracks the spot price of Bitcoin is approved. Some of the biggest names in TradFi are racing to be the first to offer one, including BlackRock. Now, if spot ETFs get the green light, they could spur a buying spree as firms purchase Bitcoin to meet reserve requirements. We're also seeing movement on crypto legislation on Capitol Hill. And crucially, Frank, there is a technical event called the Halving coming up next April, which typically marks the start of a bull run for Bitcoin.
So as you can see, they're already kind of sounding the alarm about this, aren't they? And I suppose the question I want to ask here is, do you side with CNBC here? Do you look at this and go, yeah, okay, that makes sense. We got an ETF coming up and a halving. Let's buy Bitcoin because that's going to drive the bull market. Or does it make sense that we get ahead of this, right? We get in at the lows and we sit back and patiently wait for the types of people, the types of investors that watch CNBC and then go, yeah, that sounds good. I'll do that. Thanks, CNBC. So I don't know, man. I don't know. But as far as I can tell, it seems to me like Nev is right on the money here. Throw this scenario out. There probably isn't going to be a halving-driven bull run. We're probably going to see a run-up before that. And then, like I said, I would speculate that we're going to see some kind of distribution based around the ETF forcing the halving believers to hold the bag. But of course, anything can happen. It's a market, one day at a time as always. Nice statement here from Peter Schiff. The bond market is on the verge of a major breakdown. Not only will this raise the cost of financing the $32.7 trillion of national debt that the US has, but it will crush the loan portfolios of already insolvent banks. That means a return to QE to bail them out. Fixed rate mortgages will soon hit 8%. Again, I put out a video about mortgages and the property market, and I was pointing at this as well and saying this is a crack in the system. We're starting to get these cracks in the mortgage market, in the property market, become more and more visible. Like I said at the time, it doesn't mean necessarily an imminent property collapse is coming. These things often take a long time to work out. But again, the point is, all roads eventually lead to QE. All roads eventually lead to more printing of money. And speaking of bonds and printing of money, check out the comedy that is occurring in Japan at the moment, okay? The Bank of Japan is launching a $2.1 billion emergency bond buying program only 48 hours after backing away. It's inevitable for all central banks that do QE. Their crisis response, i.e. printing money to prop everything up, is now a permanent facility, doomed to maintain stability with perpetual buying. So on Friday, Japan comes out and says, that's it. We've got to be more hawkish. We can't allow this to keep going on. We've got to withdraw some capital. We've got to do our best to slow this down. This is getting out of hand. And then they come in on Monday morning and go, oh, actually, that was our mistake. We're going to have to print more money. We're going to have to buy more bonds. And we're going to have to do this to the tune of $2.1 billion. It speaks to the fragility of the system, doesn't it? This is an incredibly fragile system. And like I said, all roads lead to printing. And of course, all printing leads to higher Bitcoin prices. So hopping into the charts, rejection at resistance or breakout, that's to be determined. I would think we're going to see a rollover. Gold and silver still haven't quite had that strong push out of the cycle low. So maybe we've got one more undercut to make before we can go. I've drawn in this green line for gold, get a breakout above there. And I think what I'm going to do is add a position and move the stop up for the first. So it'll probably look something like this from wherever this green line occurs. So we'll see how that goes. Silver, kind of the same deal, isn't it? We've got a first undercut, but no real sign of a true swing and reversal yet. So we'll see what the market can give from here. I do expect silver to resolve to the upside over the coming days. Here's the S&P 500. We had pretty good closes, to be honest, didn't we? We did not, despite having this big red session on Thursday, we did not then roll over and continue or start a true downtrend. So far so good. Still long. Remember, the blue upper support line is the line in the sand. We're due a daily cycle and a weekly cycle in the mid to late August time frame. And I've added this red arrow here because I think that's about as long as we can go from a time perspective. This is not predicting price, this is predicting time. I think this is as long as we can go from a time perspective before we'll see that top and the decline into the daily and weekly cycle low. So it'll be interesting to see what happens this week. But the closes were very good. I was talking about how the closes were important. Here's the NASDAQ, so still above the blue upward sloping support line. Everything kind of looks good, right? Particularly if today's session we can break out and close above this downward sloping blue resistance line, then I see no reason why this couldn't continue up for another 10 or so sessions before we get that rollover into the cycle lows. Dow Jones still looks pretty good to me, so happy days, long and strong continue to push. And the VIX still seems to be consolidating to me before some kind of final flush down to the ultimate low, whilst we get that ultimate high in the stock market. Still pushing Apple, so again, you know the story by now, right? All the while we're above the upper sloping support lines, we can continue to hold this long. XRP still kind of doing a whole heap of nothing, going sideways, and so is Ethereum, as you can see here. So we'll see what happens from there. Bitcoin also still kind of more or less sideways. It has indeed broken down from this bull flag though, so I will expect to see a flush into that daily cycle low time frame, and that's where we'll be looking to add a long and put a stop below wherever the low forms. And of course the expectation is that Coinbase and the crypto related equities are likely going to do the same. We've got some kind of downward sloping resistance line here, so we're probably going to chop around here into the end of the current 60-day cycle for Bitcoin, and then I think we can get a swing and reverse and buy the breakout, and of course add positions as we've been doing with the likes of MicroStrategy right here, and of course Riot as well. So all of these I think it adds, as I've been saying over and over again. Same is true of Marathon, but I probably would not at all be surprised to see a little bit more downside in the short to medium term whilst Bitcoin finds that cycle low. If I hop into this fractal chart, just in case you missed this, the 3 blue lines denote the 60-day cycle timing window with the tolerance left and right. If we get into this neighborhood and do anything apart from start to go parabolic for the price of Bitcoin, then I will scratch this idea off. Like I said earlier, I will scratch off the idea that we're going to see the left translated cycle top followed by the 3-year decline, and forcing all the halving people and the ETF buyers to hold the bag. I'll scratch this whole idea off if we get into this daily cycle low time frame and then reverse anything other than that, and we'll scratch this off. But so far, this still seems feasible to me. Like I said, we've got to have our line or lines in the sand. We've got all 3 of them right here. But now, just a bit of patience whilst we get into that mid to late August time frame, and then we'll get to see what the market can give across the board. So also, as I said at the start, I'm going to now refer you to this video. A lot of people, I guess you could say I'm a conspiracy theorist. Maybe I am, maybe I'm not. I like to think I just have eyes to see what a lot of people are uncomfortable seeing. I noticed when I put the property market video out, there was quite a few people that seemed quite angry. When I was talking about pensions as well, I could see that rubbed a lot of people up the wrong way. And it is what it is. First of all, it's my opinion. Second of all, I tried to be as objective as possible and just point at things. And if people want to disagree, of course, they're absolutely entitled to do so. But if you're one of those people that often gets rubbed up the wrong way by the things I say, then perhaps it would be nice for you to hear some of these things coming from somebody else other than me. If you're one of these people that can see what's going on anyway, then you're probably going to enjoy this, okay? So either way, I'd like to now push you over to the Market Snipers channel. Check out this video he did here with Bill yesterday. You're going to like this, and I think everything in there is very, very important. These are 2 very high-level traders, so their word is to be taken seriously. So go and check that video out, and in the meantime, take care from me. All the best. Cheers. Bye.